Hey, what's up, my friend? Welcome back to this week's market analysis. It is so good, right, to have you with me each and every week, right? Whenever I publish a video, I typically get about 4,000-5,000 views, right? And I really feel appreciated knowing that, there is so many of you out there who, watch the videos on a weekly basis and who appreciate, the work I do. So, thank you so very much. I really appreciate it. And to show my appreciation for you, right, this week, the 6th of July, I will be releasing my brand new trading guide, the Inside Bar Trading Strategy Guide, right? How to write big trends and find high probability breakout trades. I will email my email subscribers on how to go about getting the guide. So if you're not on my email list, I highly encourage you to do so. So you will, have the exact steps, right, to take to get my trading guide, right? So just go down to tradingwithrainer.com, the link below, right? And I got 2 trading guides over there, right? Just download any one of them, right? And that's all you need to do. And if you're on my email list already, then don't worry, right? On Thursday, I will send you instructions on how to go about to get this guide. And it's free in case you're wondering, okay? So that is just a quick announcement. Moving on to this week's market analysis, right? I'll be sharing with you, right, what's going on in the financial markets, a broad overview, right? So you know what's going on in the Forex market, indices, bonds, metals, and etc. And on top of it, right, I will share with you, right, which markets are the best to trade. Either they are the strongest market or the weakest one. So this is where I would say the best trading opportunity lies for, trend follower. So all this and more in this week's video. I'll see you there. Okay, so the first chart that we'll be looking at is the euro dollar. So as you can see over here, right, the price is above the 200 period moving average, right? I'm using exponential for those of you who are wondering, right? Because I've got questions, right, from traders asking whether is it simple, weighted, linear, right? I'm using exponential, right? But it's not really going to make much of a difference. But, just FYI. So anyway, the euro dollar is above the 200 period moving average. So I have a long bias. And for those of you who have been following me, right, you know that I'm long this market. First and foremost, the break and close above this continuation pattern, like a bullish flag pattern, right? And then another one over here where price, break and close above it once again. So obviously, I almost got stopped out, right? Almost hit my trailing stop during this retracement, right? Then I believe a fundamental piece of news came out before, it propelled higher once again. So this is the thing about trend following. You just have no idea, how far the trend is going to move, and you have no idea when it's going to move, right? So two things: you do not know how far the market will go, and you do not know when it will go, right? Because you may enter a trade, right? It's a valid trading signal, and it fails. It's a false breakout, and then it reverses and stop you out. So you just don't know. So you just, follow the plan, manage your risk, and trail your stop loss. So for euro dollar, right, still bullish on this, right? So if you want to get onto this trade, I would say this is a level. The 113 level will be a level to look for long opportunities, right? So this is euro dollar. For the pound dollar, I want to talk about this as well. So last week I mentioned that I was looking to short this market, right? Why is that? Because if you look at the daily, last week it was looking something like this, right? Price is below the 200 period moving average, and you have this previous support turn resistance area. Okay, so on the 4-hour time frame, I mentioned that this, right, could be a potential setup to go short, right? A false break setup, but I didn't get the entry trigger. Price basically closed into this area of resistance, came back, retest, and then propel higher. Right? So what I was looking for is actually for price to close back below this area of resistance, forming, maybe a bearish bar. Didn't happen, so I didn't get into this pound dollar trade. And from the looks of things right now, it's looking bullish coming into this area of resistance, right? Not looking too long at this time, right? But, definitely not looking to short as well, since price is above the 200 period moving average. Aussie dollar, right? This market is, approaching a key resistance area at its 77.50 level, right? Which is this one you see over here. So of course you still can get long, right? In anticipation of still got some meat left in this move to test this area. On the daily time frame, you don't see any setup. Let's see, perhaps the 4-hour, right? I'm not really seeing much as well, but this could be a level, an area of support, right, that you could look for retest before price trades higher. So this is for the Aussie dollar, still bullish, right, and approaching this daily resistance. New Zealand dollar, a similar story, right, approaching the daily resistance, right, price above the 200 period moving average as well. Dollar Canadian is a nice one because we have a breakdown of the 130 level. Now price is below the 200 period moving average. So when you get strong, parabolic move like this, right, I mentioned that it can be difficult to enter such a trade because, the market is moving in a parabolic fashion. So a couple of ways that, usually you can enter this type of trade is, say, number one, you get an inside bar that looks, say, something like this, an inside bar. Right, then you can look to sell the breakdown of the low and your stop loss 1 ATR above the highs. Maybe say somewhere here. There's one approach, right, if the daily time frame forms an inside bar, right? The other approach, right, which requires a little bit more of a technical analysis is to go down to the lower time frame, like the 1 hour, and then, identify the highs, or rather the structure of this market. For example, this is an area of resistance, this is another one, right? Then look for a retest of all these levels or this level, right? And look for shorting opportunity back towards the downside. So these are two primary ways you can look to trade, strong move, a strong trending move in the market, right? That's my opinion. You may have other techniques, right? But I would say these two, works pretty well for me. Dollar yen, price is above the 200 period moving average, but I'm not looking to trade this market at this point in time because it's looking lackluster. It's pretty much still in a range. You can see that, contained between the 115 level and the 108 level, right? So it's pretty much still in a range, right? So to me, right, I find that there are better markets to trade, and dollar yen just isn't one of them. But this is the price action of it right now. Okay, so just to let you know what's going on, right? So those markets I've just shared with you are the Forex markets. Let's move on to the bond markets. So the bond markets, you can see over here, right? This bond market I mentioned also some time back, right? That we have this range over here. And then we have this build up, right? I basically long the break of this build up, right? When this price, break and close above it, right? So it went slightly in my favor before it collapsed back lower, hitting me out on my trailing stop, right? So this is a small loss for me on this trade, not a full 1R because, I started trailing my stops and I got hit out of the trade. So I guess, there's nothing wrong with this trade. I'm perfectly happy with it, right? This is just, the outcome of one trade. But I would say the key message to think about is that, no matter how good a setup looks, right, you have to be prepared for losses. The best looking trading setup can still result in losses, right? So this is definitely a good takeaway, something that you can learn from, right? So nonetheless, this is the 30-year bond, right? Looking, pulling back, perhaps back towards this area of support, right? And we will, keep a lookout. The 10-year similar story, right? Pulling back as well. If you look at the bond, right? Pulling back as well. So you can see that generally the bond markets, they are, retracing or, trading lower over the past couple of weeks. So that is for the bond markets. Look at the indices, right? So I think this is relates more to those of you who are investors in the stock markets. So this is the S&P 500. It still looks bullish. There is no sign of it weakening at this point in time. No doubt there is a spike in volatility over the last 3 or 4 days, right? But this area of support is still holding. And this one, right, still holds as well. And if you just look at the 200 period moving average, which is this, price has been above it, right, for a long time, right? So your bias should be long, right? So if I, just zoom out a little, you can see that there are times that, you chop up and down through it, right? But generally, if you stay, or rather, you trade along with the 200 period moving average, you will be on the right side, right, more often than not, okay? So this is for the S&P 500. Let's look at the... What else? How about the DAX? Okay, so this is the DAX, right? Same thing, right? Still bullish, but not as bullish as the S&P. As you can see, that the retracement coming is stronger, coming into this possibly this area of previous resistance turn support, right? So again, still above the 200 period moving average, right? Somewhere closer to home, Asia, the Nikkei 225, right? Still bullish, right? Price is trading near the highs and it's above the 200 period moving average. Okay, so moving on, right, let's talk about how about some commodities, right? Oil. So oil is again in a massive range. If you just look back, if you just go to the weekly time frame. Oh yeah, I want to thank this to Daniel, right? He's one of the YouTube. He left a YouTube comment, right, saying that, hey Rainer, you can actually use a shortcut for your time frames, right? Instead of going to here and then click the relevant one, just put a star and it will appear here as a shortcut. So thank you, Daniel. This is really useful. Okay. So anyway, back to oil, right? You can see that we have a false break set up on the weekly time frame. Price came into this area of support, trade below the low, and then it closed higher. So this is a false break setup on a weekly time frame. And what is likely to happen is for oil, it will go back and retest this 48 level and possibly back towards this 51 level. So, oil is, looking bullish in the short term, right? And, it's possible that it could retest this couple of levels that I've shared over here. So for short-term traders, right, you want to be long oil, right, with expectation that it could, reach these two levels. So, and how about gold, right? That's another market that we can talk about. Okay, so gold, generally, it's similar to the yen, right? It's pretty much still in a range, choppy price action. You can see that, this is the weekly time frame, pretty much in the long-term range. On a daily, right, at this point in time, it's in the middle of the range. And if you know me, right, I don't like to trade in the middle of the range relative to the time frame that I'm trading, right? So if you are seeing the daily time frame and it's in the middle of the range, I don't like to trade this. But of course, if you go down to a different time frame, it could be trading at an area of support. So this is why I said relative to the time frame you're trading. So if you go down to the 15 minutes, okay, there you see, it's coming into this area of support, right? So there is a difference, right? You don't want to be trading in the middle of the range relative to the time frame you are trading, right? So I don't trade the 15 minutes time frame. I'm more of a daily and 4-hour time frame trader. So right now, it's in the middle of the range and I don't want to be trading this. Why is that? Because if you think about this, right? If you were to go, say, short right now, okay, where are you going to put your stop loss, right? This, to me, is the structure of the market that you want to reference to. And if you want to give it some buffer, you put it, say, somewhere over here, 1320, the stop loss. And where are you going to, enter the trade? Over here, right? So you can see that from here all the way to here is your risk. And from here all the way to here is, possibly your reward, because this is an area where, buyers would come in. So from the risk to reward standpoint, it doesn't really make sense to me, right? Because I'm risking so much just for this little bit of gain. Okay, and it could possibly just go down a little bit and then reverse all the way back up. That is possible as well. You draw those trend lines, or that is quite a possible likelihood. So to me, from a risk to reward standpoint, it doesn't make sense. So this is one of the biggest reasons why I don't like to trade when the price is in the middle of the range. And trust me, right? I mean, if you look through your past trades, right, look at how many times you're entering it when price is in the middle of nowhere, right? If you stop taking such trading setups, right, I believe your trading will improve, right? You want to be trading at, point of interest on your chart, area of value on your chart, like, area of support, area of resistance. If you trade from these areas, right, I would say you have a much better chance, right, of making money in the markets, because, your stop loss can be tighter and there's a good chance of it at least reaching your first target from your entry point. Okay, so look to trade from an area of value and not when price is, in the middle of nowhere. And this is all relative to the time frame you're trading. Okay, so let's do a quick recap, for this week's market analysis, right? We have covered, an overview of what's going on in the financial market. First and foremost, we talk about the currency pairs, right? The USD, right? So most of the USD pairs, right, in terms of the dollar, it's looking weak, right? As you can see that a lot of them are rallying, right? The euro dollar is rallying, Aussie dollar, New Zealand dollar, dollar Canadian broke down. So the USD, this means that the dollar is getting weak. Okay, so this is what we see generally in the Forex market. Then we talk about the bond markets, right? Also, we have seen some slight pullback. All right, so again, the bond market's not looking too strong. All right, what is strong is the indices, right? I want to say stock markets, but the word indices came out, right? It's looking strong, right? Most of them are bullish still across the board. Right, oil also short term, right? We saw that we had a false break, right? Looking bullish in the short term. And last but not least, gold, right? To me, don't really have any buyers, so I'll just say it's pretty much flat for me, right? Flat. Okay, so this is basically what's going on in the financial markets right now, right? And I hope this kind of gives you a so-called an insight into the directional bias you want to trade for these different sectors. Okay, so with that, right, I wish you all good luck and good trading. If any feedback, comments, just leave it in the comment section below. And if you enjoyed this video, please hit the like button, the thumbs up, right, and subscribe to this channel, and I'll always update you whenever a new video is published. So with that, I wish you a great trading week ahead, and I'll talk to you soon.